You know what? You put away gold, you put away silver, and you hope you never have to use it. And more, right? You start looking around, and I don't know, St. Louis and Chicago and Detroit and Baltimore and Philadelphia and San Francisco and all these places that are just decaying before our eyes. And then all of the mass shootings, which this isn't, and let's be clear, the mass shootings started really in earnest. Well, and I don't know about in earnest, but publicly happening right after the Great Recession. Right? There was, 26, 27 mass shootings with Obama. Of course, they're continuing here with Trump, and they're going to keep continuing. And this is what happens, right, as the bloom is off the rose, if you will, when it comes to society here in the United States. And you think about all the things that, the pronouns that you can use and can't use and this and that. There's so many things, all of them lining up. I hope you're being prepared. 800-951-0592. That is our toll-free number. The website at allamericangold.com. And gold and silver roaring again today. Gold's up, 15 here? Yeah, 15, 16 bucks, $1,518. Silver's up 25 cents, $17.25 as little brother starting to catch up to big brother. And you think about big brother, bad day on Wall Street. Yesterday, right, we had the president delay the tariffs, or at least a big portion of the tariffs, until December 15th because he's worried about Christmas. And he should be. The Dow was up 350 yesterday, down 650, actually a little more than that now, 650 plus points. The S&P's down 72, the Nasdaq's down 232 points as something happened this morning. I've been talking to you about the bond market, and I know the bond market, it's boring, it's hard to understand, I don't get it. Let me tell you all you need to know. We've got a problem. It's a debt problem. It's the same problem we had a dozen years ago. See, the only difference was, as a dozen years ago, these geniuses that run the central bank decided, you know what? Forget about economics, right? Because we've studied real hard, right? And we're real smart guys and gals. And we'll just throw the laws of economics out the window, and we'll just paper it with more debt and hope nobody notices. The bond market, for the fourth time in history, now it came close a few years ago, but this morning, this has only happened 4 times. This morning being one of them. The other 3 times, the first time was in 78 through 1980, right? And now I was a kid then. And I remember, Jimmy Carter, Iran, the Iranian hostage thing. That's all I can tell you. I don't know, right? But we had that rampant inflation, right? The next time it inverted, and I guess I haven't even told you what happened. The 2-year note is now yielding more than the 10-year note. And again, I know, it's complicated. Let me make it simple for you. In normal economic conditions, if you buy a longer dated maturity, they pay you more for it, right? They give you a better interest rate. That makes sense. Right? Okay, you're like, oh, okay, yeah. If you're going to borrow it for a short time, we'll pay you a little less. Let us borrow your money for a long time, we'll pay you a little more. So the 2-year, 10-year inversion occurred again this morning. So the first time was 78 to 80. Horrible recession. right? And then Ronald Reagan came in, and Paul Volcker, right, and raising the rates, all that stuff. The next time, I'm thinking about it, doesn't happen again for like 20 years. You know, remember the tech bubble, right? And that disaster? That was the second time it happened. And I'm sure you already can guess the third time. That was '07, right? When the start of the quote-unquote financial collapse. Now today, this is the fourth time. And I know they're going to tell you, oh, well, it may not mean what it means before, right? And I get it, right? I understand it, right? Hey, we never had $15 trillion of negative yields in bonds. And, of course, the 10-year, by the way, the 30-year hit an all-time record low today. All-time record low. Big problems in front of us. We got a great show lined up for you. I am actually ignoring the move today, so you're going to have, this is the last day. I got two items. We've been running these items on special for the last several days. Today is the last day that you're going to be able to take advantage of that. Stay with us. A ton of news coming to you. Patriot Radio News Hour. Don't touch that dial. 800-951-0592. This is an absolute, think about it this way. This is how I'm going to equate the gold and silver market today. Think about the crash. Housing collapses. The financial crisis follows. All, whether, a lot of you out there, a lot of you listeners, you lost your home. Your neighbors lost their homes. Your parents, your children, right? Your friends, your relatives, everybody. I don't even know how many people the average individual out there knew who lost their homes. Right? And all of you start thinking about, man, I knew 5 people. I knew 10, right? Hey, I knew 20 people. I mean, it was so widespread. And, of course, when was it the time to buy all of those houses? Right? It would have been right then, right? Go back, right? 2009, 2010, right? That was the time to be buying it all. It's exactly how I feel about gold and silver today. So think about our history, stock market history. This is only the fourth time where the 2-year note yields more than the 10-year note. The other 3 times, horrible times, right? In our history, we'll recover, I think. But every time, think about this. They've all occurred since we let the Federal Reserve take over in 1971, right, and go full fiat and get rid of gold altogether, right? Of course, they took the gold away from us in 1933. And, of course, the standard of living today, I don't need to tell you. Today, some other important factors today when you think about, is it the time to buy or not? And why I say it's like that. I've got 2 items today. I've got a silver item and a gold item. We've been selling for the last several days these rolls of silver quarters. They get 40 quarters in a roll. The melt value, and if you took a blowtorch to one of these rolls of quarters, it would have 7.15 ounces of silver in it. And at $122, which is what we have them on sale for, it would bring the price per ounce to $17.06. Silver right now just went past 17 and a quarter. Remember, yesterday it touched 17.50. It's probably going back there. And actually, it's not probably. It's going back there and a lot higher. Buying government hallmark silver today, it's one day, it's the last day, under the actual melt value of the product. That's how you want to buy it. Remember, our rule is, hey, buy U.S. government hallmark material and buy it as close to spot to possible. Now, you're going to be able to buy government hallmark silver below spot for one day. Gold. We've been selling these gold eagles. Here's the problem. I've only got 30 of them left. We're down to the last 30 American gold eagles. These are 1 ounce government hallmarked gold eagles. 3.9 fine, the whole shebang. $8 over spot. The cost on these things. And I've been doing, like I said, I've been doing this. This is, 16 years now? Back when I first started, gold was like $300. Tells you how good gold's done since I've been here. 300, 1,500. It's pretty good. It's 500 times. Well, 5 times, 500%. Sorry. That's a big difference. It's a big difference between those two numbers, but 500%. Cost. Back at $300 gold, they used to charge a dollar amount over spot. Back then, it was like $18, $19 over spot would be my cost, and then we'd charge above that. Then they said, hey, they got rid of it, and they went to a flat-out percentage. So the higher gold went, the more over spot it cost. Normally on a gold eagle, cost $40 to $50 over spot would be my cost. And then what? And then, hey, I got to make a few bucks myself. Paying $100 over spot on a gold eagle used to be a good deal. $75 over was like, whoa, somebody's giving it away. $7 over. There's 30 of them left at 800-951-0592. Now, let me tell you why it's not just the inverted yield curve that's got everybody nervous. Think about what the president did. I did not like what he did yesterday, right? It gives China is winning, right? And, of course, they were out in the press. I don't know if you saw the articles. They're all out there crowing about it and all that stuff. But maybe, and probably more than maybe, there's a real reason to be worried here. The United States Postal Service says it is in a dangerous death spiral as it could run out of cash by early next year, the Postmaster General has warned. And a new report from the Wall Street Journal suggests the downfall of the post office could come more imminent than previously thought. Here's why I'm telling you to be worried. Package delivery volume. So you think about Amazon, you think about the post office, right? They deliver all, every day, all the packages they're delivering, the mail they're delivering, declined in the second quarter of 2019 for the first time, you guessed it, right? Go all the way back to the throes of the crisis, 2009. The cause of the drop, Amazon, UPS, FedEx, delivering online packages home. Well, what's funny? Like FedEx got out of the Amazon business. Here's the problem. That's not the issue. They've been around. All of these companies have been around for a long time. The issue is there's just less volume. They said that the Postal Service now is facing a further shortfall. Remember, I recorded last quarter they lost $2 billion in the quarter. The first decline in package volume in over 10 years for UPS. Here's the problem. FedEx, UPS, the Postal Service, right? All three of them said the same thing, right? They all had earnings come out, and they all said the same thing. Volumes are down. We know that student loan debt's at an all-time high. We know that credit card debt's at an all-time high. Yesterday we learned mortgage debts have now finally taken out the old peak. Even though less and less Americans own home, debt's at an all-time high. We know what happens when that happens. You know, when you look at these cycles, you go back to 78. Go back to 2000. Go back to 07. All the same things. All of those peaks there. We saw record levels of consumer debt. Yesterday, I talked to you about bankruptcies, right? The rise. I mean, really picking it up. A significant increase in bankruptcies this summer. And this was out of Wolf Richter. Guy does great research. The auto industry depends on subprime rated customers, makes up 21% of all auto loans. So I want you to think about this. This is the worst of the worst. Right? These are the people with the worst credit, right? There's a history. You can almost guarantee they're probably not going to pay. More than one. Think about when you're driving in rush hour. Driving home from work, you're in rush hour, just start counting cars. More than one out of every 5 people in a vehicle has subprime credit. And listen, I'm not talking about you need 800, 750, 620. These are this is bad credit. Without these customers, the wheels come off the industry, and all of a sudden, once again, serious auto loan delinquencies, 90 days or more past due. In the second quarter of 2019, jumped 47 basis points to 4.64% of all loans. By the way, that is the highest level since Q4 2010. The highest level since Q4 2010. Matter of fact, just took out the third quarter of 2019. And remember back then, that was what people weren't paying the house and were keeping the car. According to the data, Q3 GM, Chrysler, right, they filed bankruptcy the last time the defaults were this high. And again, it is and I'm just looking here, it's about the third highest level. We had from 2009 to 2011, that 2-year period is the only time it was higher. By the way, the highest all-time level is only 5.27%. So we're at 4.6, where is it? I just lost it here. 4.64. Start figuring it out. Right? When we've been wondering, hey, we knew things were slowing down, right? We felt it slowing down, but hey, it's still going to be okay. All the signs are lining up now. The worst one, obviously, the yield curve inversion. It's only the 4th time in history, and the other 3 times we were in recession. And bad ones. These weren't the nice ones, right? This wasn't the 2001 recession. This wasn't the Bush senior recession of the early 90s. These were nasty ones. And we have the same economic things happening, right? We have a world slowing down. We have consumers now. We finally hit all the categories. Credit card just below all-time record highs because people are defaulting, right? Remember, I gave you that number last week. Auto loans at record highs and defaulting. Student loans, nobody's even paying those. All-time record highs. And now the mortgages are back to all-time record highs. We've got debt everywhere. That's why it's so important to own gold and silver. It's the one thing. Physically own it. Buying gold mining stocks is not owning gold. Buying an ETF is not owning gold. Right? Those are debt instruments. Think about it. Everything in the world is debt. Doesn't it make sense to have something that isn't a debt? 800-951-0592. Rolls of silver quarters. You're going to be able to buy silver below spot. Right now, 20 cents below at 122 a roll. 1 ounce gold eagles until they're gone at 15 and a quarter. By the way, now $5 over spot on gold eagles.
This is the Phyllis Schlafly Report, a daily commentary continuing the conservative pro-family legacy of Phyllis Schlafly. Now, the president of Phyllis Schlafly Eagles, Ed Martin.
50 years ago, the U.S. government launched a rocket carrying 3 men to the moon and returned them safely to Earth. That was not a leap of faith. It was precisely calculated by natural laws which guaranteed a predetermined successful outcome. But war is not rocket science. Its consequences are not predictable. A military maxim observes that no battle plan survives the first contact with the enemy. Every war has very unpredictable consequences. As a presidential candidate, Donald Trump strongly condemned the nuclear deal with Iran that John Kerry negotiated and Barack Obama implemented without the advice and consent of the U.S. Senate. As president, Trump has continued to criticize the deal and has refused to certify Iran's compliance with it. Trump also justifiably complains about how the Obama administration allowed $1.7 billion in actual cash to be flown to Iran on a cargo plane. Running for president in 2015 and 2016, Donald Trump excoriated previous Republican presidents for intervening in the Middle East. He's called the decision to invade Iraq the single worst decision ever made. President Trump should remember his statements and other examples in history now that there seems to be conflict brewing in the Middle East. In 1979, Iran seized 52 American hostages and held them for 444 long days. That was an act of war under international law, but the Reagan administration wisely chose not to go to war over it. President Trump has talked the talk on non-interventionism. Some Republicans were even unsettled by Trump's scathing remarks about George Bush and John McCain. Now the swamp, often referred to as the deep state, is making a determined effort to tempt Trump into fighting a new world war against Iran. It's time for Trump to walk the walk on avoiding foreign entanglements. Pressing issues demand to be dealt with here at home. Illegal aliens are pouring across our southern border, enticed by free medical care, which California just enacted for them, and by the availability of driver's licenses, which New York State just gave to them. These are real and pressing problems that deserve President Trump's undivided attention.
This has been the Phyllis Schlafly Report from Phyllis Schlafly Eagles. What's the best way to rekindle the spirit of Phyllis Schlafly and the grassroots movement she energized? In this digital age, patriots and pro-family Americans can find insight and inspiration on our website, phyllisschlafly.com. Then share your own heart and mind on social media. So join us at phyllisschlafly.com and every weekday for the Phyllis Schlafly Report.
800-951-0592. Gold, $1,519. Silver, $17.26. Rolls of silver quarters. Now, that's 20 cents below spot. Final day, $122 a roll. Get all you can. Listen, I'll be shocked if we don't see silver really start. And again, it's already had a nice run, but really start piling it on. Silver's still $5-6 undervalued right now. And then 1 ounce gold eagles, whatever's left. We only had 30. Arlene's been on the phone. Man, never in a million years would I have told you, Hey, you can buy a 1 ounce gold eagle for $6 over spot. But hey, it's why we're the best at what we do. 800-951-0592. Here's where we're going. Rates are going below zero. I've been telling you this. I know you don't want to believe it. Pull your head out of your backside. Increase your exposure to gold and silver. Lower your exposure to debt. Period. This is what is happening today. And this is how they work, right? The central bank, right? They try to telegraph what's coming. Alan Greenspan was out. Remember, right? This guy was the maestro. And he was the guy that everybody thought, man, see, these central bank guys, they're good guys. Look at this guy. He's the maestro. We've had this great economic growth. And after that yield inverted in the 80s, and then Volcker, he came after Volcker, things were great. We got these 401ks. Part of the reason why Alan Greenspan was so great, because trust me, he wasn't. And history is going to judge this man very harshly. But think about what he had the benefit of. They robbed us of our pensions and gave us 401ks, so Wall Street had a bunch of money. So, he comes out today, and I'm just going to read what he said. He said that he will not be surprised if U.S. bond yields turn negative. Yeah, no, that's just normal economic sense, apparently. Remember, it's already happened in Switzerland, the Netherlands, and other places now, charging you for your bank deposits. It's coming here. There is an international arbitrage going on in the bond market that is helping to drive long-term Treasury yields lower, he said. Yes, you know what it is, Alan? Mr. Maestro? All the central banks just make money up out of thin air and are buying it all. Without that, right, these rates would be flying. Look at all the tails to these auctions, right? Nobody wants to buy this crap. Nobody wants to buy it. All the bid to covers are all at record lows throughout the bond market. Almost every type of issuance, bid to covers are at record lows, which means nobody's there. Greenspan, who led the central bank from 87 to 06, said in a phone interview, there is no barrier for U.S. Treasury yields going below zero. Zero has no meaning besides being a certain level. See, zero doesn't mean anything besides the level, which is zero. It can be anything. By the way, German Bunds this morning, negative 6.5%. And going lower. By the way, September now, 100% chance of a rate cut from us, 100% chance for a rate cut from Europe, 100% chance for a rate cut out of Japan. Get ready. Get ready. And again, you know what? I'm telling you right now, we're going to cut again. And again, and again, and again. 30-year notes, all-time record low. The 10-year note back in the 1.5s this morning. And they're going to go negative. Quantitative easing 4 is coming. All of this debt that these consumers have is coming to fruition. They can't pay the bill. Right? It's just that simple. They can't pay the bill. Overall bankruptcies in general on the rise. Credit card defaults on the rise. Subprime auto defaults on the rise. Student loan defaults on the rise. You get the picture. Right now, housing, we haven't seen it there. But let's face it, we don't own houses anymore. Right? Rental communities popping up everywhere. It's nothing more than major investors. And think about this. If rates go negative, you think anybody, all these people that used to be in the bond market, they're going to buy all the houses. You may never own a house in America again. You got to get a yield somewhere. But I loved his point, and this is something that you really need to understand. Zero's just a level. It doesn't mean a thing. And he's right. He's right. And you're sitting there and you're trying to think about how is all of this supposed to work out. And this is really, it makes sense to me because, you know, the realities are the standard of this country has been falling now really since 1971. It's so obvious to see. And, of course, they've got all these channels trying to convince you that you need to own debt and how great the stock market is. And we've got the greatest financial system in the world. Really? The guy that was regarded, now he's not as regarded anymore, but right back in the day, regarded as the best central banker of all time, comes out today and says, oh yeah, of course we're going to go negative. Absolutely. Right? Think about it. This is our new economic model. This is where you're going to put your financial well-being. Hey, I'm going to loan the government money for 10 years, and they're going to pay me less than I lent them. You think that's going to give us economic prosperity? Or you think the rest of the country is going to turn in to St. Louis or Chicago or Detroit or San Francisco or Baltimore or Philly? You know which one. 800-951-0592. Patriot Radio News Hour. We'll be back after the break. 800-951-0592. Rolls of silver quarters. I have a lot of those rolls. I have a lot of rolls of silver quarters. Again, 20 cents and 20-plus cents now. Under spot. At $122 a roll, you get 40 quarters. Man, I just love it. Great fractional material. I mean, if you ever, we hope it's orderly. Listen, the dollar's done. Okay? Sorry. It's done. 23 trillion in debt, breaking records, right? And think about this. This is a good time. What happens when the recession comes? How big is the debt going to be then? How big? 2 trillion, 3 trillion, 4 trillion. Now the central bankers are finally admitting, hey, listen, zero's just a number. We're going to go below that, way below it. Right? What it says what about the money that's in your bank account? It's not worth anything. Don't you get it? Gold's at record highs in, 80 countries? Why? It's got to be at record highs here soon. Much sooner than you think. And again, this is something I always tell you, be diversified. Be diversified. Right now, though, you need to be diversified more heavily into gold and silver than the stock market or the bond market. Bad things are coming. Not because I want them to. I'm not rooting for it. Listen, there's a reason why Trump delayed those tariffs. I think about it. We didn't get anything. China is like, so? We want us to buy stuff? No thanks. Because this is how slow things are going. Listen to FedEx. Listen to UPS. Listen to the post office. The post office, listen, they didn't say delivery slowed down a little bit. Hell, we went back to 2018 levels. Or, 2016. Hey, we went back to 2016. All right, well, that was an election year. People were kind of scared. Everyone thought Hillary was going to win. I could have bought that. That's not what they said. It's fallen so fast, we're back to 2009. Excuse me? When you start really thinking about, all of a sudden you wake up a little bit. Wait, how negative are German bond yields? I mean, we're approaching negative 1%. And as Alan Greenspan put it, hey, there's no bottom here. There's no bottom. Right? The whole premise, I want you to really understand this, because I'm going to make it simple for you why you need to be calling and getting yourself more prepared. When they tell you that bond yields are going to go negative, when they tell you the 30-year note is at an all-time record low, the 10-year note almost at an all-time record low, we're back into the rate-cutting cycle again. Remember that cut a little while ago? That was supposed to be the insurance cut. Remember that one? Yeah. Right. Ain't no insurance no more, folks. We got a bunch more coming now. What it means to you, though, is they want that money to be worthless. No, not worth less, worthless. They don't want you to save a thing. Here's the thing, though, and I heard, and I wish I had remembered who said it on the idiot box. This rate-cutting cycle is different this time. Wall Street was okay with the insurance cut thing. Hey, we're still okay. Now all of a sudden, Wall Street's like, whoa, wait a minute. This thing's slowing way faster than we thought. There's going to be a lot more rate cuts. That's not good. Right? And that's why you're seeing Wall Street today, down, 650, 700 points. And we've been seeing a lot of this lately, haven't we? A lot of big down days, big up days, those volatile days, right? And that's always the precursor to a big move. The last time it was a precursor to the move up, right? That was out there, we were moving up. The time before that, though, we were moving down, right? So move down, move up. This one I'm telling you, it was a move down. Macy's came out today. Horrible earnings. Profits down 50%. Germany, negative GDP growth in the German economy. All the data out of China was bad today. And you start putting all these pieces of the puzzle together. It's a currency war. The president has been begging you to buy gold. Matter of fact, while I've been talking during this hour, bash the Fed again. Way too late. He gets it. Trump knows. Somebody in that White House is telling Donald Trump the truth. Hey, man, I don't know how much longer we can hold this up. We need a lot more rate cuts. But he's been telling you he wants the dollar to go down. That's why gold's at record highs all over the world. 800-951-0592. Patriot Radio News Hour, final segment coming up. 800-951-0592. Quick final look here at the markets. Gold, $1,523. We've got 10 gold eagles left. This is it, folks. I got a funny feeling before the end of the day they're going to be below spot. But this is it. The final 10, $1,525. Spot is $1,523 right now. Gold's up $22. 800-951-0592. The loss is accelerating now. The Dow down over 700 points. Heck, the S&P's approaching down 100 right now, down 82. The Nasdaq's down 250. And I don't know what's a better buy. Those gold eagles or the silver quarters. You look at silver quarters, you're buying them for $17.06 an ounce. Spot right this second, $17.28. So you're looking at, I got to do math in my head here, 22 cents an ounce below spot. Dude, we're not talking, this isn't a round or a bar. This is government hallmarked United States minted material. 800-951-0592. Rolls of silver quarters at $122 a roll. The Gold Eagles, we got two lines open, so they may be gone, but hurry up and try to get in on them at $15.25. If you've never done business with us, it's easy. You know what? We don't want to work that hard. No free reports here. I don't want your phone number. I want your email address and all of that stuff so I can call you every single day. You know how many times we call our customers? We don't. Unless you tell us to. And even then, that's just, hey, we shipped your product today or we got your check today. There's no bait and switch here. Listen, I want you to buy the products I put on sale today. Listen, if you have $122, do yourself a favor, buy a roll of quarters. If you've never bought it before, buy it and put it away. Buy it and put it away. Silver just gets back to where it should be, which trust me, it's coming. You're talking about $23, $24, $25 to the ounce. And that's just gold sitting here at 15 and a quarter, right? Gold's on its way. Listen, gold's on its way to new all-time highs here as well. Just like everywhere else. We're not special. I know we like to think it. I do like to think that we're special. And maybe what's made us special is how much we got away with for how long. Maybe that's the one thing. But know this. They're devaluing our currency, and it doesn't matter about the renminbi and the euro and all that stuff. Listen, they want rates to go down, and they want them to go down hard. And now you got Alan Greenspan saying, hey, zero's just a number. You go way below that. All as you do, when you buy gold and silver, you preserve the money you've worked so hard for. Now they're out there telling you, hey, we want your money to actually be worth less the second it touches the bank. That's what's coming. 800-951-0592. Patriot Radio News Hour. Take advantage while you can, and let's hope we don't have to use it.